As we get into 2022, I'm focusing on the smaller positions in my dividend growth portfolio. I want to tidy up the lower end of the portfolio either by building up smaller positions that I want to keep, or possibly by trimming or eliminating a couple of the other small positions because they aren't adding enough to the portfolio and I'd rather substitute something else. In this video, I'm going to discuss the stock, one of the smaller stocks in the portfolio that I chose to add to with my February 2022 dividend reinvestment. I'll tell you what the company is, explain about the company a little bit, and let you know why I picked it. Then I'll review the impact of the new shares on the portfolio with a portfolio review, and we'll finish up by doing the portfolio scroll at the end of the video. I'm Dave Van Knapp with the Dividends and Income channel. Before I get started, I'd like to ask you to help us out by clicking the thumb up button if you appreciate this content, subscribing to our channel, and ringing the bell to get notifications of new videos when we post them. Thank you. My pick this month is UGI. That's both the name of the company and the ticker symbol of the stock. UGI is a utility holding company with 6 business segments, including a gas utility in Pennsylvania and a company called AmeriGas, which serves the whole United States and is our country's largest propane provider. I first bought UGI a little over a year ago. I have about $2,000 in it, and that comprises just 1.1% of my dividend growth portfolio. UGI is in the utilities sector of the economy. Its industry is gas utility. It's a mid-cap stock with a capitalization of just under $8 billion. Its dividend snapshot earns 22 out of 25 points on a scale that I'm still developing. But no matter how you look at it, its dividend situation, it is good. Its quality snapshot is a good solid 16 out of 25 points on my quality snapshot rating system. Its valuation is great for a buyer right now. It's more than 20% undervalued. And going across the bottom of this display, here's a few more facts focusing on the dividend. It yields 3.6%, which is more than the yield of my portfolio, so that'll help maintain that yield. It has a 5-year dividend growth rate of 8% per year, which is right at the high end of mid-range for a stock that's yielding over 3%, as this one is. It has a superb 34-year dividend growth streak going. In other words, it's raised its dividend every year for 34 straight years. And it gets a dividend safety rating of 99 out of 100 points from Simply Safe Dividends. They don't use 100 in their scale, so this is a top rated stock for safety. I also checked out Wall Street recommendations. Because it's a smaller company, there are only 4 analysts covering it, but between them, their recommendations average out to 4.0 on a 1 to 5 scale, which is a buy recommendation overall. This graph shows UGI's dividend going back to 1985. And I want to show it to you just to show how beautiful this is if you're a dividend growth investor. It shows the 34-year raise streak for UGI's dividend. The 4 gray bars running up and down the slide are recessions, and UGI has increased its dividend straight through all of those recessions and other things like wars and so on that the country has undergone in the last 35 years. And this slide gives us a little insight into UGI's undervaluation at the current time. The purple and orange lines, which overlap with each other on this graph, are indications of what UGI's fair value might be by looking at its PE ratio, price to earnings ratio, and the black line is UGI's actual price. This graph only covers 8 years, and the bar in the graph, the gray band in the graph, is last year's 2020 now's COVID recession, which was short, caused most stocks to fall. UGI's price is not fully recovered from that fall. Many other stocks, their price is right back up to where it had been. But in UGI's case, that hasn't happened. Even though, as I highlight at the bottom of the screen, UGI's earnings are growing every year and anticipated to grow every year after taking a plunge in their fiscal 2019. So again, as a buyer, you're happy when prices are low, and this shows you why I think UGI is very undervalued. This slide shows you what I did on Wednesday, February 16th, when I purchased 12 shares of UGI, increasing my ownership to 63 shares and increasing the size of the position in the portfolio from 1.1 to 1.4%. I spent $459 to buy those shares. Had just $8 left over from accumulated dividends, and that $8 will roll over to be spent next month when I reinvest dividends. And by adding those 12 shares, I also added about $17 in annual dividend income to my portfolio. If you've been following my videos for a while, you've seen versions of this display before with my 3 circles that indicate the 3 main reasons why dividends go up in a dividend growth portfolio. Reason number 1, stocks increase their dividends. Reason number 2, you as the investor reinvest the dividends. And reason number 3 is sometimes you make portfolio adjustments that increase the income flow. What I'm doing in this video is describing circle number 2, reinvesting dividends. The new dividends that we just saw from UGI hadn't been in the income stream before I bought the new shares, so they're adding to the annual flow of income and increasing the overall dividend run rate. Okay, let's turn our attention now to the full portfolio. This display gives you the top line fast stats, I call it, of the portfolio. Its market value is $171,420 as of right after I made the purchase on Wednesday. That's down 3% so far this year, as the markets themselves have been down somewhat. The number of stocks and funds owned by the portfolio remains at 30. The current yield goes up a little bit because price and yield are inversely related. So as prices go down, and if dividends don't go down, which they don't in my portfolio, by mathematics, that means that yield goes up. So yield has gone up to 3.2% after starting the year at 3.1%. That's an insignificant change. The annual income run rate is up 1.3% so far this year to $5,508 on an annual basis. The yield on cost now stands at 11.8%. That's a new record high. The yield on cost is up 0.2 percentage points since the beginning of the year. And what that 11.8% means, and this is why I track it because it's such a good number, I spent about $47,000 starting this portfolio in 2008, and it's now returning me in dividends alone 11.8% of that original starting amount every year in dividends. I think that's really cool, and that's really why I'm a dividend growth investor. That's the main metric that I pay attention to, is the annual dividend run rate compared to how much I spent to start the portfolio in the first place. And finally, in the last column, I didn't tote up the dividends collected because it's the middle of the month. I do that at the end of each month. So far through the end of last month, I had collected $324. 2021's total was $5,197 collected, so that becomes kind of my target, plus say 10% during 2022. This slide just reiterates what I think I've already told you, which is the impact on the annual income from the purchase of the 12 shares of UGI. The income before I made the purchase was $5,491 per year run rate, and after the purchase it's $5,508. That's the $17 per year added to the total portfolio's income. Okay, now this slide shows circle number 2 about the investor reinvesting dividends. These are my reinvestments so far this year. I reinvest dividends in this portfolio in the middle of each month after accumulating them for the previous 30 or 31 days. It's February, so I've highlighted the reinvestment that we've been talking about. I've made just 2 so far this year, obviously, and by the end of the year I will have made 12 reinvestments. In the light green line at the bottom, you can see that so far the annual income added through the 2 reinvestments is $33 a year. It doesn't sound like much yet, but by the end of the year, total will be up to maybe 3.5 or even 4% of what it started the year at. So reinvesting dividends is a significant contributor to growing the annual dividend run rate in a portfolio such as mine. And this slide speaks to circle number 1, stocks increasing their dividends. That's not something I do as an investor, it's something they do as companies. And I've listed the 9 dividend increases announced so far this year. As I record this video, I highlighted in yellow the ones that I've found out about since last time. There's 4 of those, 9 altogether, and these dividend increases so far have added 1.9% to the dividend run rate, and that will continue to go up through the year. It's harder to predict because how much that will amount to by the end of the year, because we don't know obviously the size of the dividend increases until they're announced. Okay, here's the full portfolio. A couple things to notice. I've sorted the positions this month by size from largest to smallest for a change from alphabetical. I've corrected E-Trade's statement of annual income for 2 holdings from Pepsi-Cola at the top to reflect the 7% increase that they have announced, but E-Trade has not worked into its numbers yet, and from QYLD, the high yield ETF that I've told you about before, at the bottom, because I don't think E-Trade calculates the annual income from that correctly. I've also highlighted in yellow the UGI position that we've been talking about in this portfolio. And while you watch that scroll, that's the end of this video. Thank you very much for watching, and I'll see you all next time.